Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast. And today's guest is Neil Herbert, who's the chairman of Atlantic Lithium, a junior miner, and looking to develop Ghana's first lithium producing mine and targeting first production in 2024. Neil's an experienced advisor and investor in leading growth companies from startup through IPO and development. And during his career, has been involved in a number of mining companies in Africa. Neil's going to talk to us through Atlantic Lithium and how they're going to obviously become one of Ghana's first lithium mines. So that's welcome, Neil, to the podcast. How you doing, Neil?
I'm very well, Rob. Good to be here.
Yeah, and I appreciate your time as well. So just wondered if you can give our audience a little bit of background about yourself. Obviously, I just briefly covered it there, but wondered if you can tell the audience a little bit about yourself so they know a little bit about your background and your career.
Yeah, happy to do so. So my background is financial. So I'm getting a little old, but I originally trained as an accountant with PwC. It was a long time ago, but I've worked in the mining industry for the best part of 25 years. So I started with Antofagasta. We built the game-changing Los Pelambres mine during my watch with the company, and obviously that propelled the company from being, a $200 million company into what it is today, a $20 billion company. So that was a very successful project. Following that, I was a CFO of one of London's early AIM successes, which was Branco Holdings. So that got sold in 2002, and it was for $368 million, if my memory serves me well. I went on to work with an investment group with Jim Slater called Galahad Gold, which had a number of very good projects in it. But the one that I was designated to look after was a startup uranium project, which became Uramin, and I became the finance director of it, listed in London, listed on the TSX, and later it was sold on to for $2.5 billion. So as our investment was 25 million, for 26% of the company, it was a very successful story and a very high return. Following that, I was managing director and co-chairman of another investment house in London called Polar Resources, focused a lot in the industrial segment, and so principally uranium again, and had a very successful run there. So I think we paid out dividends around $200 million during my time as the managing director. So a very good run. I came into this company. I joined the board on its listing, worked very closely with its founder, Vince Mascolo, who sadly passed away earlier in the year. And the projects have come thick and fast. We've looked at a number of projects over the years until we identified Ewoyaa. And Ewoyaa is just an exceptional opportunity in lithium. So we've had a very successful exploration program on it. And as many people will probably already know, it's a very well situated all spodumene project in Ghana. We've already have a resource of 30 million tons. We have put in our application for a mining license, and we're in the process of building up our team under Keith Muller, who's the COO, for the mining of that project.
Okay, so just wondering if you can just tell us a little bit more about the Ewoyaa project, and hopefully I pronounced that correctly.
Yeah, Ewoyaa is a very good project, and this is one of those good fortunes in life. There's a lot of other lithium projects in Africa. Ewoyaa is exceptional in that it's an all spodumene project. So if there's a holy grail here in hard rock lithium projects, you would like to have spodumene because it's the most desirable in terms of the recoveries. It's what the converters prefer. So all of the Chinese converters, indeed the Western ones being built, would prefer an all spodumene product. It's better for their kilns. It's better in terms of impurities later in terms of into the batteries, which actually affects performance. So that's a very nice project, and that's probably the only one in Africa that I know that's all spodumene. It also is very well situated in terms of closeness to port. So we're 110 kilometers from a port in Ghana, which is an established mining port. So already has all the infrastructure in place, very good road networks, and we have available power. I often say about this project what I really like about it in my 25 years in mining, and I've worked on some cracking projects, really have, but this is the simplest project I've ever worked on. It's a very simple process flow sheet to be able to take it to production, which is a real bonus when you're trying to get a mine to production on a reasonable timeline.
How different is operating in Africa compared to Australia, where you've obviously done a lot of work?
Yeah, and so I mean, it really depends where you are in Africa as to what you have, and it would be wrong for me to say that one country is like another in Africa because it's truly not the case. Ghana is I suppose one of the longest established mining jurisdictions in Africa. So it has a long history in gold mining, and so that goes back all the way until before independence of the country, and as a result of which, we, in many ways, really are a very Ghanaian company because our staff are overwhelmingly Ghanaians. And what the nice thing about working in Ghana is you have a lot of knowledge, both in government, but also in terms of the people working on the project with us, how highly qualified and experienced people are working in the mining sector. And it's a blessing. I've worked in a number of jurisdictions across Africa, and some of them are better than others, but it's very difficult to find fault with Ghana in terms of what it has in terms of its tradition. Obviously, Australia is a very good jurisdiction, and we like to compare ourselves to the Australian projects because we think we have a number of similar attributes. Again, all spodumene projects. There's a very good comparable, we think, of something which we aspire to compare ourselves to, which is core lithium, which has come to production. So if you like, they're a good 18 months ahead of us in terms of timeline. It's a very similar project in terms of its characteristics. Its OpEx, CapEx are similar. And they currently have a market capitalization of around 5 times our market capitalization. So we're about 300 million sterling today. And the market capitalization of core lithium is 1.5 billion sterling today, more or less. So that gives an idea of what can be achieved as we go through the hurdles towards mining.
Yeah. How's the Ghanaian mining industry sort of taken to you? As you mentioned, they are, I suppose, more well known for obviously gold production, and you're obviously in lithium. How have they sort of taken to you?
It's been very pleasant talking to the ministry and indeed the reaction we're getting in country, because obviously the country has a long established tradition in gold mining with a number of operating mines, but has been trying to diversify into other minerals and indeed to some success in several other minerals. But they particularly welcomed the opportunity, as it were, to participate in what is the electric vehicle revolution by actually having a lithium mine. So we'll be Ghana's first lithium mine. Was with the minister at the end of August. Very good meeting. Obviously, very keen that we move the project forward. I know he'll be very happy to have received our mining application last month, which is a big step forward for us as we move the project. So in an ideal world, what we'd like to see is that mining license being approved as it's evaluated over the next year, and they have all their approvals in place by around the end of the third quarter next year, so that we can break ground on the project by the end of next year.
How are you managing the transition from a pure explorer into a new near-term producer?
It's certainly creates its challenges, and I've had this with companies before. I mean, the great thing about Atlantic is that it was a very successful explorer. And we're a very good team of people who have worked on the project all along, and indeed on our other projects. But it's very rewarding when that comes to a project that you can definitively take to production with the low capex, low opex characteristics that Ewoyaa has. But we obviously need to transform the team. So we continue to explore on the project, and indeed the resource just gets bigger and bigger. We increased it from 20 million tons to 30 million tons already this year. We've just done a whole series of further drilling, both to increase the resource, but also to a greater category of certainty to move it up to reserves for the mine plan. So we're probably at another 5 million tons or so before the end of the year, is my hope. But you could see that the project could potentially get bigger. So we still have work for our exploration team. But as I said earlier, what's very important to us now is the project build team and indeed the mining team coming in. A very important appointment for us was the appointment of an experienced lithium miner as our COO, which we announced a couple of weeks ago, and we're delighted to have him on board.
You obviously we've mentioned Ghana as a sort of a long history in mining. What would you say from your perspective? What makes Ghana a attractive mining destination for, I suppose, people that haven't worked in Ghana previously?
I think that the advantages of Ghana is the advantage of experience, but it's also a very prosperous West African nation and one of the most prosperous in Africa. So we're looking at relatively high standards. So there are high standards of bars in terms of the the compliance that we have to achieve to be able to take the mine production as it should be. So I think that gives a lot of reassurance because they have so much experience on that front. It also it comes back to comments previously. I think they have 3 or 4 different universities that provide people into the mining industry. The depth of experience of those people is very good. We have electricity on call. So actually the pylons run through the center of our project today. That all originates in hydropower. We're very close to the main highway, which is a tarred road, which would take us to port. So that's 110 kilometers, as I think I mentioned again earlier. And it goes to a port that has all the infrastructure for mining export. So it's because you've got an awful lot of things going for it. And obviously it's one of Africa's most stable democracies as well. So we're delighted to be working there. We think it's a particularly good jurisdiction. I've worked, as I say, across Africa, but I would say that one of the most deeply experienced countries in mining is indeed Ghana. So it's difficult to fault it, really.
Yeah. How do you see obviously the lithium demand and lithium supply, and also I suppose lithium pricing charging over the obviously coming years?
So it's a very good question. I was actually looking today at the Macquarie's latest research. So Macquarie Bank have put out an updated research which follows a theme. They're upgrading their price estimates for lithium because it's supply constrained. And so if you want to stand back from it, you've got obviously a once in 100-year event in terms of changing technologies here. So this is the move from the internal combustion engine over to electric vehicles. And what that means in terms of demand is an enormous increase in demand for lithium over the next decade. And to give you some examples, there's a chap called Sanson, an ex-FT commentator who wrote a book called Volt Rush. He's estimating you need 70 new lithium mines in the next decade. An estimate from Benchmark Minerals is 59 new mines. What all this means, however, is that you just can't bring on enough mines quickly enough. Bringing on mines obviously is a difficult and time-consuming process. So any new mines that are relatively straightforward to bring forward on a short-term timeline are particularly welcome. So Ewoyaa, I think, fits in very nicely into that with first production in 2024. So as I mentioned, the Macquarie estimates, I think they put them out today. They're now forecasting that they think that the price of lithium will, on individual sales will peak as much as 8,500. If you look at the operating cost estimated for Ewoyaa, I think with $284. So you can see this fabulous returns that are available for the few mines that will be able to bring production forward on a timely basis. And I was just looking through, their estimates, and effectively that they estimate there'll be a deficit in the supply of lithium for the rest of the decade. Obviously, the penetration of electric vehicles is increasing sharply, and interestingly enough, they estimate that actually China will overtake Europe in terms of its penetration of EV vehicles over the traditional combustion engine.
How important has it been for you and obviously the company securing the offtake and financing deal with Piedmont?
I think the Piedmont deal gave us an awful lot of stability. So for those who don't know Piedmont is building 2 hydroxide plants in North America. And there's obviously an increasing rush in Europe and indeed in North America to build their own hydroxide plants because China currently dominates that sector completely. They obviously need feedstock, so they came to us about 2 years ago with the intention of securing that feedstock. So what we did was we entered into an agreement with them whereby they earn into 50% of the project, providing, I think it's a little bit over $100 million in total for financing. And they also buy the spodumene product for us at market rates. So those are entirely commercial rates. So that's a that's a very good deal for us in terms of it secured like an anchor in terms of people obviously often worry about financing of the project. That gave us an awful lot of financing. So they provide 70 million of the 100 million towards capex, and obviously any additional overruns over that, they would pay for half of those, and we would pay for the other half. We do have potentially other sources of financing. I'm not expecting to go back to the market, to raise money. We do have one potential investor in Ghana, which is the Sovereign Wealth Fund that's been talking to us for some time, which may invest, and we would like to see them on board because we think it'd be good to have that local participation in the project. The other one is the other 50% of our offtake is currently unencumbered. So we are inundated with people interested in taking that spodumene off our hands in the future, and you've seen some very attractive financing deals around that. So I do expect that to be a good deal when eventually we announce it. We're in no particular hurry to do so. I would imagine we'll come to those terms by the middle of next year.
Yeah, and what's the outlook for the company and the project over the, say, next 6 to 12 months?
Well, we're in the process of a major transformation, to be honest. Obviously, we were an exploration company. If you're looking at the next 6 to 12 months, by 12 months from now, we'll be looking to break ground on the project, and we'll be within a year from taking the project to production. So that's an entirely different company to which we were, say, at the beginning of this year. So it's a fundamental change in what's going on. However, the good news is that, as I said before, this is one of the simplest projects I've seen in 25 years, which makes it for a relatively straightforward task of taking it to production. Very simple operating and processing. In terms of the personnel, we're in the process of making those changes now. So we have a project team which is focused on the development and indeed bringing in people with the mining experience that we need. So it's a big transformation, but it's one very manageable and something that I've gone through previously in my career.
Yeah. Neil, really appreciate your time in obviously telling us about the company, and obviously it looks like you're going to be the first obviously lithium miner in Ghana. So obviously wish you well for the next year or 2 years and beyond. Obviously, like you mentioned, it's a great jurisdiction to develop a new mine, especially in a new commodity that's, I suppose, new to the country. If our audience wants to reach out to you, if they've got any questions, how can they go about doing that? Are you across any social media platforms?
We are, so you can contact the company. We actually we are on Twitter. We're on other social media platforms, and indeed you can reach out to us. We will be at Mines and Money event in December here in London. So we look forward to hopefully meeting up with investors and talking to them as we go on.
Yeah, certainly. And those that are wanting to attend the Mines and Money event, if you look at the show notes of the company's podcast, there is a discount on tickets as well. So please be sure to get your tickets and get them as soon as possible. And obviously, if you want to ask Neil any questions, obviously you can meet him in person at the event. Neil, really appreciate your time. Good luck for the upcoming year. Rest of this year and into next year. Have a good Mines and Money, and yeah, good luck with the company and the project.
Thank you, Rob.
Yeah, thank you. And those who are listening, really appreciate your continued support. Please share this episode amongst others in the industry, whether you're listening to this in Ghana, whether you're listening to this in Canada, South America. Please keep sharing the episodes. So we can obviously educate the mining industry and the mining community across the world. So until next time, happy mining.